Today's financial advice is sponsored by Endeavor Private Wealth. And Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our weekly segment on investing. Good morning.
Good morning.
So investing involves identifying and managing different types of risks. So last week we discussed inflation and credit risk. So what other risks should investors be aware of?
Tiffany, there's a lot of different risks out there. Today I think we'll just focus on volatility and cover the others in the future.
All right, and so explain what volatility is.
Volatility is going to be the rapid and unpredictable change in a price of an investment. Oftentimes it's very fast when it happens, and it can lead to a good feeling on the upside and a not so good feeling on the downside. Think of it kind of like a roller coaster. We all enjoy the thrill of going up and making money, but then on the descent, it may not feel as good and may be a little queasy to the stomach.
Yeah, so if you're riding a roller coaster, you're hanging on until the ride is over. And so does that apply to investing too?
Well, it depends, because sometimes that downward pressure can be too much for investors to stay with. And we know that nobody likes to lose money. And actually the feeling of losing money is twice as bad as making equal amount of money on the upside and that good feeling that comes with it. So the unpleasantness may cause investors to want to get off the roller coaster and stop the ride, oftentimes at the worst possible time.
But if the investor were to just hold on to their investment, it would recover and they'd be okay?
Perhaps, but we never know what will happen next. And so understanding that different investments have different risk and reward traits is very important. This analysis shows the best performers to the worst performers of asset classes over the last 15 years. And I've highlighted on the left, there's an arrow by real estate, which was the best performer in 2006, only to be the worst performer in 2007. And then emerging markets was the best, followed by the worst performer the next year.
Okay, and so it seems that every asset class has roller coaster-like characteristics. So the only question is how scary or how volatile the ride is.
That's exactly correct. So if you'll focus with me on the white squares in this chart, the white squares illustrate a hypothetical diversified allocation, and you'll notice that it's neither the best performer or the worst performing, but compared to the downside risk, it outperforms any other single asset class except for cash and bonds. It gives you a much better return and could be a ride much better for investors over the long term.
All right, Chris, that's all the time we have. Thanks again for joining us this morning. To learn more about Endeavor Private Wealth, visit endeavorpw.com. And now for a look at your forecast, let's send it over to meteorologist Becky.